The S&P 500 renewed record as usual, while small stocks rallied and gold hit a fresh all-time high level as well. The US dollar is under pressure. The euro dollar drills above the 109 level at the time I'm talking here, while cable is stronger this morning after a stronger than expected set of inflation figures from the UK eased the August rate cut expectations for the Bank of England. So welcome. This is Swissquote's Daily Market Talk. 38. The S&P 500 hit a fresh record this year for the 38th time on Tuesday. Banks rallied on earnings, which show that the big banks' trading revenue jumped nearly 20% in the second quarter of this year, and their investment banking revenues rose significantly as well on increased deal making during the same quarter, while the technology-heavy Nasdaq 100 index lagged with smaller gains yesterday. The Russell 2000 index rallied another 3.5% on the other hand, hinting at this developing sector rotation story from big technology to other sectors. As such, the Russell 2000 gained more than 10% since last week, while the S&P 500's equal weight index rose faster than the technology-heavy normal weighted index. And all this was happening regardless of a better than expected retail sales data from the US and also a jump in Atlanta Fed's GDP forecast from 2 to 2.5%, which could have cooled down the Federal Reserve rate cut expectations, but somehow did not do it, at least yesterday. Now, the thinking behind the sector rotation is simple. The upcoming interest rate cuts from the Fed and other central banks should give support to smaller and more cyclical pockets of the market and eventually convince investors to rotate from highly valued technology names to, other sectors. Now, some say that the rising odds for a Donald Trump win in November presidential election is also supportive of smaller and cyclical pockets of the US market, as obviously his domestic and his growth-focused policies will benefit disproportionately to these sectors, is said. But hey, another set of strong earnings, could actually make investors think twice about this rotation. And Netflix and TSM will be opening the earnings dance as soon as tomorrow this week to give us a first hint on where the earnings season could potentially go for the big technology stocks. And also, Mr. Vance, that Donald Trump just revealed as his running mate for the presidential election earlier this week, is a technology and a cryptocurrency investor. And it said that Mr. Vance is one of the strongest blockchain advocates on, Donald Trump's shortlist. It appears that he perceives cryptocurrencies as the only realistic way to shake up big technology and finance. So no wonder Bitcoin is also having a good run since the assassination attempt on Donald Trump last weekend boosted his chances of returning to the White House with Mr. Vance by his side. And the Bitcoin appetite could eventually translate into a broader cryptocurrency appetite, especially for Ethereum, mind you, as an Ether, a spot Ether ETF, is also about to see the daylight, maybe as soon as next week. And net inflows to publicly traded cryptocurrency-backed products have been massive since, the spot Bitcoin ETF got approved at the beginning of this year, remember. So Ethereum is testing the $3,500 resistance to the upside this week. Anyway, what I'm trying to say here is that the Donald Trump effect is good for cryptocurrencies, good for oil producers, gun makers, as we talked about it yesterday, but also good for big technology in general. And it's just not great for long-term US treasuries. But even there, the 10 and 30-year US papers, their yields eased yesterday as the 2-year yield consolidated a touch above the 4.40% level, as the market is now pricing in a 100% chance for an interest rate cut in September from the Fed, with odds of 50 basis point cut rising. Again, note that yesterday's retail sales data from the US and the first few hours of Amazon Prime Day sales, which climbed by almost 12% compared to last year. That's more than expected. Well, they're not necessarily supportive of dovish Fed expectations, but the dovish Federal Reserve expectations are gaining momentum right now. The machine is running, and it is quite difficult to stop it. As such, the S&P 500, cryptocurrencies, the small stocks, and the US Treasuries are, not only the winners of the current market environment, because we also have gold as a good winner. Gold hit a fresh record level at yesterday's trading session and again today on the back of these falling US yields that decreased the opportunity cost of holding the non-interest bearing gold, and also on the back of rising geopolitical tensions on news that Iran reportedly tried to kill Trump in the past few weeks, although there has been no evidence at all that the weekend's shooting has anything to do with them. As such, it's probably just a matter of time before we see the yellow metal hit the $2,500 per ounce psychological milestone, but some profit taking could eventually kick in at that level, given that at the current levels, gold is entering the overbought market territory, suggesting that the yellow metal may have been bought too fast and in a too short period of time, as the rest of the asset classes that have been boosted by the super deal of Donald Trump and Jerome Powell, and it would be healthy to see some minor downside correction, at least in the short run, before we could see a further rise in gold prices and in other asset prices. In the FX markets, the US dollar index is still sitting on the major 38.2% Fibonacci support on this year's rebound and should, based on the rising dovish Federal Reserve expectations, be in a good position to clear this support and eventually step into the medium-term bearish consolidation zone for further weakness. Cable jumped this morning as a knee-jerk reaction to the latest inflation figures from the UK, but gains rapidly faded. Now, the data show that inflation in Britain stagnated in June versus the expectation of a further easing, and these higher than expected inflation figures from the UK actually cooled down the expectation of an August interest rate cut from the Bank of England. But note that because the September Federal Reserve rate cut is already fully priced in, there is still more room for a dovish BOE pricing into late summer than a dovish Fed pricing, which means that we shall still see a limited upside potential in cable if the pair manages to clear the 130 offers, which remain quite strong after the inflation data. And stronger offers are seen near the 130, 150, 132 area. Across the channel, the Eurodollar is drilling the 109 offers to the upside this morning, and the Euro bulls are targeting the 110 psychological level. The Eurozone will be revealing its latest inflation figures later this morning, which should show steady to slightly lower inflation figures across the board. But unless we see a big surprise in these figures, the European Central Bank expectations should not change. Now, what's interesting here is that crude oil is not benefiting from the actual Trump and Fed euphoria at all, because the sluggish Chinese growth is apparently waiting on the black gold prices these days. The barrel of US crude is back below its 100-day moving average and is preparing to test an important Fibonacci support to the downside, which is the major 38.2% Fibonacci retracement on June to July rebound, which stands near $80 per barrel level, to determine whether the price will stay on the actual rising path or sink into a medium-term bearish consolidation zone. But note that, fundamentally speaking, the reflation environment of today is supportive of oil prices. Therefore, we should see a decent support into this $80 per barrel technical and psychological level. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope This episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.